Well, it appears the sellers on Friday night in the US were just kidding, because after a single tweet from the US president on Sunday night, all of the market fears appear to have abated. We saw markets rally across the board in Europe and US overnight. The Nasdaq up more than 2%, the S&P 500 up by 1.6%, taking back about half of Friday night's losses. And it does look like that the fear levels that were very elevated on Friday night have softened considerably. Now, we're not out of the woods yet, and the evidence for that is in the VIX. Although it did ease, it's still at 19%, considered a higher level. And so there are still some lingering concerns. And we see that in the action in other markets as well. Bonds rallied again, the US 10-year down to 404, and gold rallied one more time. In spot trading, gold cracked 4,100, and the Australian mining stocks in the gold sector have been powering ahead. They were the stars of the show yesterday again, and despite a soft market, gold stocks were up 5 to 7% in trading yesterday, reflecting that strength in the gold price. And while those gains in gold itself are starting to look quite vertical and therefore concerning, the momentum there remains very strong. And while some fear lingers about share markets, it's quite likely we'll continue to see support for the gold price. So one to watch out for. And of course, after those big gains yesterday and then a further lift in the gold price overnight, Aussie gold stocks will be a focus in trading today. But turning to the global landscape, we start the US reporting season. It's underway in earnest this week. And as per usual, we'll see reports from the major financial stocks this week. Now, this is very important at the moment. Always important, of course. Financial stocks are at the heart of every economy. But with the American Bureau of Statistics out of action, with the shutdown going on at the moment, we don't have much data coming through to show us what's been happening recently. And so the banks that report this week, and all 6 of the biggest banks will report either tonight or tomorrow night, it's that reporting that will give analysts insight into what's really happening in the US economy. So these reports are even more important than usual. Tonight, JP Morgan, Wells Fargo, Goldman Sachs, Citigroup, and we'll also hear from the world's largest fund manager, BlackRock. So plenty of evidence in tonight's reporting out of the US as to what's going on there. These are, of course, the third quarter results for those major financial stocks. It's expected we'll see double-digit earnings per share growth. An extraordinarily strong performance in what is traditionally a conservative business. Revenues are expected to gain by 3 to 10%. And a lot of this is built on a big turnaround in the deals market, including IPOs. Last quarter, the third quarter of this year, there were 52 major deals in the US. And that, of course, is good news for those large investment banks that supervise and take fees from these deals. And that big increase, the 52 deals for the quarter, is the largest that we've seen since 2021. And combined with a bounce back in trading conditions, market at all-time highs and good volatility, there's every reason to back the analysts in their estimates that this will be a good third quarter for the finance sector in the US. Looking at BlackRock, it's up 2% in trading overnight. It will report early tonight. In other words, before 11:30 p.m. East Coast time here in Australia, we should see BlackRock's report. It hit an all-time high just recently. It's up 20. It's expected that they'll show a revenue jump of 21% in their report tonight, and that's why the share price is looking so buoyant at the moment. A number of analysts, in fact, almost every analyst has an outperform on this stock. The price targets start at around $1,300. In other words, about 12% higher than where we are right now, and they go higher than that. So there's a lot of optimism about, first of all, the quarterly report that will come out from BlackRock tonight, but secondly, the prospects for it to continue to push revenues higher. Another stock in focus in the US is Broadcom. It was up 10% overnight after announcing an OpenAI deal. And it appears a number of those major tech stocks have discovered that there's a magic formula to lift their share price. That is to announce a deal with OpenAI, because that's exactly what drove Broadcom higher. The deal that was announced is to build custom chips and they're looking to also collaborate on data centres, and the 10 gigawatt size they're talking about would put them at the forefront of that industry. Broadcom shares are up 50% year to date. Many analysts have a strong buy. That's certainly the way it's rated on the community section of the Moo trading platform. Plenty to look at tonight in BlackRock and Broadcom. But turning locally, looking at ANZ Bank, because yesterday its new CEO announced a restructuring plan and further ambitions to drive returns on equity and to reduce costs and increase revenues. And while these might sound a little like motherhood statements, you'd expect every CEO to do that. His commitment to it and his clear demonstration and willingness to act seemed to impress shareholders, because we saw ANZ's shares jump by 3.3% yesterday. And that jump was in sharp contrast to its peers, which all fell, to the market, which fell, and to the region, which fell. So very clear that yesterday shareholders gave a tick to the ANZ CEO and his plans for the restructure of ANZ. That cost cutting, of course, will cause some pain in the short term, particularly in terms of job losses. We're looking at stricter cost to income goals here for the bank. Whether or not these goals are achievable is certainly it's fair to question. No bank CEO has successfully delivered on an ROE, return on equity, promise in the last 3 decades, but nonetheless, the market at least prepared to reward the ambition behind the announcement yesterday by the CEO of ANZ Bank.